Good morning, everybody. It's Trent Klarenbach with Klarenbach Research. Today is June the 11th, 2024. Before I get started, I'd like to talk to you about the Ag in Motion trade show up near Saskatoon at Langham, Saskatchewan next week. It's a large outdoor trade show. If you're a farmer or industry participant, you will find this trade show rather interesting. I will be there in the Scotiabank Center tent. Come check out my booth. Come check out me. We'll have a little visit. Tell some BS stories and tell each other some lies, and I'm looking forward to meeting you. It'll be a good time. I was posed a question yesterday. I'm going to look at the other screen here and read it. And the question is, have you tried charting an equity or commodity against gold or against the Big Mac index? The Big Mac price index, which has been created by The Economist magazine, and it measures the purchasing power of various currencies throughout the world. And basically what that tells you is if a Big Mac costs more in one country, they have a weaker currency than one that has a cheaper Big Mac price. Went on to ask me the questions, would the same indicators have any utility? If technical analysis is strictly quantifying human emotions, then those relationships shouldn't be tradable using charts. If TA still works, then there is some more fundamental pattern behind price. Now, very intuitive poster on this forum. I like him. I like the way he thinks. He asks some intelligent questions, and I consider this to be one of them. There must be some more fundamental pattern behind price. Well, we'll get to that in a minute. So I do this. I chart a number of different price charts here. You've probably seen my Bitcoin wheat video posted a week or two ago. You want to check that out, and it demonstrates how technical analysis does work in my mind. Keep in mind that technical analysis is more of an art than a science, and you can throw a number of market technicians in a room, and they're much like economists. You'll have if you have 10 economists in the room, you might get 15 different answers. The same would be for technical analysis market technicians. So it is more of an art than a science, and no single strategy is 100%. So you have to develop a feel for the market. Much like a lot of industry participants do in the commodities and the financial sector. So this first chart up here is what I have here is the SPY index, the S&P 500 index, not the SPY, the S&P 500 index relative to the price of gold. Now, this is the first example. Now, the S&P index is priced in US dollars, but this is relative to the price of gold. So you can see here that it trades in a pattern. We throw some moving averages on here, and we can see that it does trend, even though those unrelated assets, seemingly unrelated, they do trend just like every other asset does. Check this out here. Does TA work? I drew a Fibonacci level from the high in February 24 down to the low in April 24, and we are finding resistance right where I expect it to be, right in the golden zone, what I call the golden zone between a 61.8 and a 65% Fibonacci retracement. Why is a Fibonacci retracement important? You look at pictures from the universe, we see the Fibonacci spiral, we see it in snails, we see it in flowers, how the petals open up from the bulb. It's everywhere. It's in our metric system. 61.8 miles and 100 kilometers, so 0.618 shows up in our metric system. It becomes self-fulfilling because a lot of eyes are on it, but nonetheless, you want to be aware of these levels. I track you've seen my Bitcoin gold reference likely in past videos. Again, there are probably two investment choices. So what this tells you here, does TA work? Well, how TA works is you want to buy the asset, the security with the most relative strength. So if the trend is up on Bitcoin, then you want to own Bitcoin. When the trend in this chart here, where it's in a downtrend, you want to own gold. So you're better off holding gold than Bitcoin. So don't get dogmatic about your ideas and your positions. But TA does work. I didn't draw any Fibonacci's on here, but you'll see it's easy enough to draw trend lines, and you can see how these same patterns show up time and time again across all asset classes. On to commodities here. This is the Thomson Reuter core commodity price index relative to the S&P 500, the ETF called the SPY, and we can see here too, it trends just like every other asset class and security. You can see here, this is the weekly chart. We can see resistance came at the 50-week moving averages, which we anticipate all the way down here. And once we broke above that 50-week moving average, instead of acting as resistance, it started acting as support, and you can just see how you see these patterns throughout time. Now, his other question was, there must be some fundamental pattern behind price. Well, I mentioned how you see these Fibonacci spirals, for example, in pictures of the universe, the Milky Way. We see it in nature all the time. We've adopted those principles into the metric system, and why do these patterns show up all the time? I do not know, but I see people more intelligent than me talk about the simulation theory, and it's an interesting concept. I'm not going to go there. You're going to think I'm crazy, and perhaps I am. I don't have an opinion on it because it's so far out there, but it's an interesting thought exercise. My name is Trent Klarenbach. It's sunny in Saskatoon. Life's good.